Hey everyone, welcome back to Corporate Decoder. Today we're diving into a shareholder report that's surprisingly interesting. It's not every day you see a document filled with so much financial data and future-looking statements that could make or break a company. Let's see if we can figure out where this company's heading. This report's for the Fidelity Stock Selector Large Cap Value Fund and a few other related funds. It covers the year ending January 31, 2025. We're looking at their annual shareholder report, which means it's time to see how they're doing and what big changes are happening. The report itself highlights changes to the fund that occurred during the reporting period. It's important to note this information is on Fidelity's Stock Selector Large Cap Value Fund for the period February 1, 2024 to January 31, 2024 to January 31, 2025. So we're getting a full year's picture. Let's get right into it, starting with costs. For the Class M shares, the costs of a $10,000 investment were about $152, which is 1.37%. Not bad, but let's see how it affected performance. Here's what they said affected their performance. US equities did well overall, driven by strong corporate profits, excitement about artificial intelligence, and anticipation of the Federal Reserve cutting interest rates. Security selection was a big factor in how the fund performed, particularly in information technology. Okay, let's look at how the fund has been doing over the long term. This section has a cumulative performance chart showing how an initial $10,000 investment would have grown from January 31, 2025. Class M shares started at around $9,650 in 2015 and ended up at $23,606 or $6. Now for the average annual total returns. For Class M shares, including the sales charge, the 1-year return was 17.86%, the 5-year return was 10.777%, and the 10-year return was 8.85%. The Russell 1000 Value Index showed stronger gains with 26%, the Russell 10 annual return of 9.42%, the Russell 10.542%, the Russell 10 of Lagging Index showed stronger gains with 26.71% 1 year, 14.97% 5 year, and 13.54% 10-year returns. Looks like the fund is lagging the overall market. Let's look at the fund's key statistics. The fund size is around $677.8 million. They have 163 holdings. The total advisory fee paid was roughly $4.5 million. Portfolio turnover was 72%. This gives a quick snapshot of the fund's activity and scale. Now, let's check out where the fund is investing. The biggest sector is financials, making up 23.2% of the fund's net assets. Industrials and healthcare are next, both at 14.2%. Information technology is at 9.6%, and consumer staples are at 7.2%. This tells us where the fund is placing its bets in the market. The top holdings give us even more detail. The top holding is Wells Fargo at 2.7% of the fund's net assets. ExxonMobil is next at 2.4%, followed by Bank of America at 2.1%, and Norfolk Southern and Allison Transmission both at 2.0%. Let's see how the fund has changed. The fees associated with this class changed during the reporting year, including variations in management fee, operating expenses, performance adjustment fee, and expense reductions. So some changes to the fees are something to keep in mind. Now let's do the same thing for Fidelity Advisor Stock Selector Large Cap Value Fund Class A. And same disclaimer as last time, this report describes changes to the fund that occurred during the reporting period. For Class A shares, the cost of a $10,000 investment were about $1.25. So that's $1.12525, so that's 1.12%, slightly better than the previous one. For Class A, an initial $10,000 investment in 2015 would have grown to $23,471 by January 31, $2,609, and the Russell 1000 Value Index would have grown to $35,609, and the Russell 1000 Index would have grown to $35,609, and the Russell 1000 Value Index would have grown to 24. The Russell 10,000 Value Index would have grown to $35,606. These results are nearly identical with the M class. For Class A shares, the average annual total returns, including the sales charge, were 15.441% for 1 year, 10.43% for 5 years, and 8.91% for 10 years. Without the sales charge, the returns are 22.46%, 11.85% respectively. Again, the returns and ratios are nearly identical with those of the M share. Class A's key fund statistics are also quite similar. The fund size is still $677.8 million with 163 holdings. Total advisory fee was $4.5 million and portfolio turnover was 72%. What did the fund invest in? Nothing changed. Here are the market sectors as of January 31, 2025. Financials, 23.2%, and information technology, 9.6%. Seems like no change here in terms of sector concentration. Likewise, top holdings still include Wells Fargo 2.7%, ExxonMobil 2.4%, Bank of America 2%, 2.5%, Norfolk Southern 2.20%, Orange Pension, Allison Transmission 2.0%, and Allison Transmission 2 Dongade. Again, the variations in class fees are primarily the result of the following changes: management fee, operating expenses, performance adjustment fee, and expense reductions. Now let's talk about Fidelity Midcap Value Fund. For the Class Z shares, the cost of a $10,000 investment were about $82, a much smaller number than before, so that's about 0.74%. These Z share classes usually have lower expense ratios. Security selection was a significant driver, particularly in real estate and materials. Overweights in Vistra and Constellation Energy helped, but a non-Benchun Hess stake in Weatherford International detracted. Exposure to consumer staples and information technology increased during this period. Here's the fund's cumulative performance starting from February 1, 2017. An initial $10,000 investment in Class Z would have grown to 25, not bad. The Russell Midcap Value Index would have grown to 9,000. The Russell Midcap Value Index would have grown to $19,482, and the Russell 3000 Index would have reached $29,106. It's doing well relative to its sector, but losing out to the broader market. Now for the average annual total returns for Class C shares, the 1-year return was 20.48%. The 5-year return was 13.1% and at inception return was 9.36%. The Russell Midcap Value Index returned 19.36%. The Russell Midcap Value Index returns are 26.32% for 1 year, 9.78% for 5 years, and 8.69% since the fund's inception. For the Russell 3000 Index, the returns are 26.32% for 1 year, 9.78% for 5 years, and 8.69% since the fund's inception. For the Russell 3000 Index, the returns are 26.32% for 1 year, 14.68% for 5's inception. For the Russell 3000 Index, the returns are 26.32% for 1 year. The fund size here is about $1.9 billion, which is significantly larger than the previous fund with 192 holdings. Total advisory fees were $15 million and the portfolio turnover was 96%. This is a very active fund. Here are the market sectors as of January 31, 2025. The top sectors are industrials 18.44%, financials 17.6%, and materials 9.6%. This mix is quite different from the stock selector fund. The top holdings are Sun Communities at 1.6%, Welltower at 1.1%, KKCCRPU, ECOP at 1.1%, Coca-Cola Consolidated at 1.1%, and Hartford Financial Services Group at 1.0%. Again, much different than the top holdings for the stock selector fund. Now, the numbers show a pretty clear picture. While the fund has delivered decent returns, it consistently lags behind broader market indexes like the Russell 1000, while the emphasis on value stocks makes it naturally more conservative. There are questions as to whether the investment selections are maximizing shareholder value, or if the higher expense ratios are justified by the performance. The allocation to financials looks a little heavy. It might be beneficial to diversify further to reduce sector-specific risks. I think there are also some warning signs with increased spending on advisory fees, which could be a warning sign. All in all, this report paints a picture of a fund at a crossroads. While the fund's recent returns and well-balanced portfolio provide a good foundation, failing to adapt to broader market trends could mean a slow decline. A more dynamic investment approach and stricter expense management will be crucial to keep this fund competitive. Let's now get to Fidelity Equity Income K6 Fund. It's another annual shareholder report that contains the 2024 to 2025 time span. The hypothetical cost of a $10,000 investment for this fund is only $38, so we are only paying 0.34% for K6. So far, this one's a champion in low costs. Factors affecting the fund's performance. US equities gained, driven by strong corporate profits, the potential for artificial intelligence to drive transformative change, and the Federal Reserve's long-anticipated pivot to cutting interest rates. Here's the cumulative performance from June 13, 2019 through January 31, 2025. $10,000 invested in the fund at its inception would have turned into 25,461 Bothi 1B 17,500 performing compared to this fund. The same amount in Russell 3000 value would be 17,520 to this fund. The same amount in Russell 3000 value would be 17,507 and performing compared to this fund. The same amount in Russell 3000 value would be 17,507 fund at its inception. Would have turned into 20,461. Both benchmarks are underperforming compared to this fund. The same amount in Russell 3000 value would be 17,507 and 22,101. Festi 1 and it 1 Phi all in Russell 3000 value would be 17,507 and 22,181.81. The average annual total return for the past year is 20.48% for K6, also outperforming the benchmarks. Fund size 235,431,141. This is the smallest by far of the funds. There are 123 holdings and advisory fees for 667,180. Key market sectors were financials 29%, healthcare 13.8%, and industrials 12.3%. And the top holdings include JP Morgan Chase, Anpco, ExxonMobil Corp, and Walmart Inc. So as we mentioned earlier, these funds are only for retirement accounts. I would say this is the best performing fund relative to its sector, while also having a good low cost. As with all of them, past performance isn't an indicator for future results, but this fund seems the most optimized. After analysing these filings, we can conclude that Fidelity Devonshire Trust runs a number of funds targeting multiple classes, some performing better than others. The fees associated with each class also fluctuate according to the fund. While there is nothing clearly wrong here, each investor should carefully look at the options and make sure they are choosing the right fund for their needs. The investment decision should come after an investor carefully evaluates the trade-offs between different share classes. But hey, that's just my take. What did you think of this SEC filing? Did you find it useful? If so, subscribe, leave a comment, and let me know what other filings you'd like me to decode next. Thanks for watching.